Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Abhilash and welcome to Cut to the Chase, the podcast where we focus on market events that truly matter. It was a strong day for equity markets as almost all major indices across the globe ended in positive territory. S&P 500 was up 1.45%, while Euro Stoxx 600 rose 1.7%, with technology sector leading gains in both the markets. Speaking of technology, it was on this day in 1996 when world chess champion Garry Kasparov began a 6-round match against Deep Blue, a chess-playing computer built by IBM. While Kasparov won 4-2, as we know, Deep Blue bounced back and won a rematch in the subsequent year. Much like Deep Blue's performance, we are seeing a very strong recovery in the technology sector after the horrendous start to the year where US technology sector stocks fell by over 15%. Following the strong rebound we've seen over the past few days, US tech sector has recovered more than half the declines seen in January. Now, overnight, a modest decline in 10-year Treasury yields following a strong bond auction also probably helped the gains in technology sector. Of course, as we've been highlighting this week, the US CPI data will be key and it could trigger volatility in technology sector and broader markets in the near term. But as we've shared in our previous publications and podcasts, over the longer run, evidence suggests that earnings growth rather than interest rates are the primary driver for technology sector, and hence we remain bullish on US tech sector in the medium to long run. Another reason why today is notable from a financial markets perspective is because Australia's central bank, RBA, would be ending its quantitative easing or QE program today. Prior to the pandemic, Australia had the distinction of not resorting to unconventional policies like QE and avoiding a recession for over 28 years. However, the QE program over the last 2 years has led to RBA tripling its balance sheet, and the central bank will take a decision around May to decide whether it chooses to reduce or maintain its current balance sheet size. All of this, of course, comes under the backdrop of a fairly strong economic growth rebound, and markets have already priced in 4 rate hikes by RBA in 2022. While we believe that 4 rate hikes may be a stretch, the strong fundamentals do certainly argue for further strength in the Australian dollar. Overnight, Australian dollar broke above 0.7175 and the uptrend appears intact for now. But if we take a bigger picture view, the pair is still in a choppy range and needs to overcome the resistance at 0.7365 before the uptrend takes on a much stronger appearance. Before I leave, a reminder that Steve is back tomorrow with his Through the Noise podcasts, so please do watch out for that. If you enjoyed this podcast, please don't forget to rate and like it. Thank you for listening and wish you a very happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.